All right, welcome back everyone to Crypto Charcha. It's March 11th, 2025, and we're back with another deep dive into the crypto markets.
Daily deep dives, as you guys know.
That's right. And today we've got some pretty significant news to unpack. Bitcoin has dropped below $78,000,
Oof.
which is a pretty big drop. We're talking over 5% just today and more than 23% since February.
Yeah, not looking so good.
So for all you traders and crypto enthusiasts out there, this is definitely something to pay attention to.
Definitely.
So in this deep dive, we're going to really take a look at what's driving this downward trend and what it could mean for you guys.
Yeah, let's get technical.
Absolutely.
Yeah.
We'll be looking at some recent articles. We'll be talking about whale holdings, market forecasts, technical price levels.
That good stuff.
All the things you need to know to navigate this this kind of turbulent market.
Exactly. It's times like these where you really need to look beyond just the headlines, and really understand what's going on beneath the surface. And one of the most important things to pay attention to is whale activity.
Okay, so let's talk about the whales.
Let's do it.
Whale activity. What do we even mean by that? Why is it so important?
Okay, so whales, right. These are the big players in the market, the ones with tons of capital. And when they make moves, it can really shake things up.
Right, because they have so much Bitcoin, right? So if they start selling, it can really push the price down.
Exactly. And on the flip side, when they're buying, it can drive the price up. So watching what they're doing can give us a glimpse into, the overall confidence of the market.
Makes sense.
So what we're seeing right now is actually quite interesting. According to data from Into the Block, whale holdings have dropped to their lowest level in 6 years.
6 years, wow.
Yeah. We haven't seen numbers this low since back in 2019. And that's a pretty clear signal that, maybe these big players are starting to lose faith in Bitcoin.
So it's not just that they're holding less Bitcoin, it's that they've been actively selling it off.
Right. Over the past 7 days, the net flow of Bitcoin among large holders has plummeted by a whopping 85%.
85?
Yeah.
That's huge.
It is. Basically, way more Bitcoin is flowing out of their wallets than in. It's like they're actively trying to reduce their exposure.
So historically, what has this kind of whale activity meant for the market?
Well, historically, these kinds of large sell-offs have often preceded major corrections in the price.
So this could be a sign that things are going to get worse.
It's definitely something to keep in mind. It doesn't necessarily mean that a crash is imminent, but it does suggest that the market is vulnerable right now.
Okay, so whale activity is one piece of the puzzle.
Hmm.
But there's also been this whole thing with President Trump's executive order about the strategic Bitcoin reserve. What's going on with that?
Yeah, that's been interesting to watch. Initially, there was a lot of excitement about the idea of a government-backed Bitcoin reserve. People thought, oh, this is going to be great for Bitcoin. The government's getting involved.
Yeah, it sounded like a big endorsement.
It did. But as the details of the executive order came out, it became clear that it wasn't quite what people had hoped for.
So what's the deal? What's actually happening with this Bitcoin reserve?
Well, the government isn't actually going to be buying Bitcoin to put into the reserve. Instead, they're going to be using Bitcoin that's already been seized through law enforcement actions.
Oh, so like confiscated Bitcoin?
Exactly. So instead of creating new demand for Bitcoin, they're just repurposing what they've already got.
That's kind of disappointing.
Yeah, I think a lot of people were hoping for more. And the timing of this news, it seems like it might have actually contributed to Bitcoin dropping below that $78,000 level.
So that's two strikes against Bitcoin, the whales selling off, and the government's reserve not being what everyone hoped for. What about market analysts? What are they saying?
Well, a lot of analysts are starting to sound pretty bearish. Mike McGlone, for example, over at Bloomberg Intelligence, he's saying that Bitcoin could actually mirror the NASDAQ 100's post.com collapse.
That's a pretty scary thought. What's he basing that on?
Well, he's pointing to a few things. The overall macroeconomic uncertainty, the fact that central banks are tightening monetary policy, and the fact that investors are becoming more risk-averse.
So they're pulling their money out of riskier assets like Bitcoin and putting it into safer things like gold.
Exactly. And, despite all the talk about Bitcoin being digital gold, it's really been behaving more like a risk-on asset lately. It's closely tied to the stock market, and when the stock market goes down, Bitcoin tends to go down even more.
So what role does the Federal Reserve play in all this?
Well, the Fed's policies on interest rates are a big factor. When rates go up, it reduces liquidity in the market, which can hurt risk-on assets like Bitcoin. And if inflation stays high, the Fed might have to keep raising rates, which could put even more pressure on Bitcoin.
So it sounds like Bitcoin is really caught in the crosshairs of all these macroeconomic factors.
It is, and it's important to remember that, Bitcoin isn't immune to broader economic trends. It's not some magical asset that's going to go up forever no matter what's happening in the world.
Okay, so let's get into the nitty-gritty of the price charts. What's the technical analysis telling us about Bitcoin's current situation?
Let's dive in. Right now, Bitcoin is trading around $78,479. And as we've already mentioned, it's broken below that crucial $80,000 support level. And what we're seeing now is that it's testing another important support zone around $78,196.
So if it breaks below that level, things could get even uglier.
It's a definite possibility. The next major support levels are around $76,198 and then potentially even lower, down to $74,417.
And are there any technical indicators that suggest Bitcoin might be able to bounce back?
Well, the bulls would really need to reclaim that $83,568 level. If they can get above that and hold it, it would be a sign that the bears are losing momentum.
But right now, it doesn't look like that's going to happen anytime soon.
Right. Bitcoin is currently trading below both its 50-period EMA, which is around $86,039, and a descending trend line that's been forming for a few weeks now.
So the technicals are definitely pointing towards more downside.
Yeah, that's the current picture. But of course, anything can happen in the crypto market. It's important to stay informed and keep an eye on all the different factors that are influencing the price.
Okay, so to recap, what have we learned today? Bitcoin has taken a pretty significant hit, falling below $78,000. Whale activity suggests that the big players might be losing confidence. The government's Bitcoin reserve plan isn't quite what people had hoped for. Market analysts are getting bearish, and the technicals are pointing towards further downside. It's a pretty gloomy picture, but hopefully this deep dive has helped you guys understand what's going on and what to look out for in the coming days and weeks.
Exactly. And even though things look a bit rough right now, it's important to remember that the crypto market is constantly evolving.
True. There could be a sudden shift in sentiment, some positive news could come out, and things could turn around just as quickly as they went down.
Definitely. The key is to stay informed, stay adaptable, and don't panic.
Easier said than done, right?
Maybe, but it's the best approach.
Right. And if this deep dive was helpful, don't forget to like the video, subscribe to the channel, hit that notification bell, and share it with all your crypto buddies.
Spread the knowledge.
Exactly. Because the more informed we all are, the better equipped we'll be to navigate this crazy market.
Absolutely.
Now, for all of you watching, think about this. With all these negative signals flashing, with the whales selling, with the government's reserve plan not really boosting the market, and with the technical indicators pointing down, what are the specific on-chain metrics and macroeconomic data points that you should be paying attention to? Beyond just whale holdings and inflation reports, what else could give you a clue about how deep and how long this correction might last? Keep an eye on those exchange inflows and outflows, see how many active addresses there are, and maybe even look at some sentiment indicators. These data points could be really valuable in helping you understand what's happening in the market and what might happen next.
Yeah, that's a great point. It's all about connecting the dots and trying to see the bigger picture.
Right. And the more dots you can connect, the better decisions you'll be able to make. Thanks for joining us for another deep dive, everyone. We'll see you back here tomorrow for another update.
See you then.
Take care.